What's up, Benjamin?
I just realized after such an intense sports tech year, I'm out of energy. I'm getting old. I'm drinking tea out of my llama mug.
Yeah, I mean, I don't know if it's the year or it's the Berlin's changing weather, but yeah, I think both of us are on the back foot today a little bit. I've got a bottle of warm water on my side as well. Yeah, so sorry to be a bit boring, guys. It's not going to be full energy as normal, but we've got a decent house already, 40 people and slowly adding. As always, tell us where you're from, where you're joining in from, what time of day it is, how you're feeling. Hopefully, you're doing
Yes.
good.
Welcome, everyone. Most importantly, this one is for you. It's about the Global Sports Tech VC Report 2021, something that we are very excited about. I guess most of you have seen the numbers already. We definitely have because we are number crunchers. And yeah, exciting times for sports tech. So we've been looking forward to this, even though we are getting older. I'm not getting younger. Nice. Amsterdam, Slovenia, British Columbia, Canada, 9 a.m. Robert, appreciate it. Ezra, New Orleans, Simon, Nuremberg, Munich, London, wow, Paris, Minneapolis, Lucas, Göller Alaf.
I have to ask, what is Moin aus Kulla?
Yeah, it's a weird mix of Hamburg and Cologne, basically. So in Hamburg you say Moin,
but that I know.
But wow, Madrid, UK, Frankfurt, London, nice. I like it.
Lucas, I have to tell you, my first German friend in Madrid, she taught me the phrase "Moin, Digga, was gut."
Was geht? Oh,
yeah. Was geht? Did I mess that up? Shit, Valena.
No, it's impressive. Definitely. Nice. I like it. And yeah, we have quite some people here already. And yeah, diverse group from all over the world. Do we have Asia as well? Probably not because it's late, but
yeah, it's about 9:30. I think I did see somebody from India. No, yeah, originally from India is Abhishek.
There we go.
Yeah, Arun, Aru, nice, good job, Dubai. Hey, actually, I'm going to be in Dubai, Ibrahim, in February. So I don't know if that means anything.
Italia, Alessandro. Very good.
Cool, guys. Okay, so big year, Ben. Big year.
I could do this country and city game forever. I just enjoy this. Bangalore. There we go.
Actually, I'll be in Bangalore in a couple of weeks, Vimal. That's more important.
Okay, so I'll be in Cape Town next week and probably US in Jan-Feb. So if anybody wants to connect there. Alex Zorida, the man, the myth, the legend. Nice. All right, I guess you wanted to start, right?
Yeah. Let's start talking about the year, man, because that's what everybody's here for. It's been an interesting, fun year already for sports tech. No, I mean, well, actually, more than interesting, fun. It's been a bit crazy. It's been record-breaking. It's been so much money.
Yeah, and I mean, just the fact that you're here means that you are interested in sports tech. And to be honest, it is probably the best time to be in sports tech because there is momentum accelerated by a bunch of different things, and numbers are fantastic, cool new topics as well, which we're also going to cover, of course. Just a bit on the plan that we have today. 90 minutes, like a good old football game. We never practiced this before, so it could be longer, could be shorter. We're getting better, I have the feeling, so we try to be on point. And we're going to walk you through this, as we think, wonderful report and share the most interesting stats with you. One important thing just one thing, you can ask us questions in the questions tab. We'll have 2 or 3 polls. So as always, the more interactive, the better. If you're not asking anything, this guy over here and myself will try to make it as entertaining as possible.
Yeah, that's about it. Yeah, questions, polls, it's all pretty simple. Let's go, Ben. Let's go.
Cool. Yeah, we are 5 minutes in. And just a quick one for the guys and ladies out there who don't know us yet. We are SportsTech X. Next year we exist for 5 years already. So amazing how fast time flies by. And what do? That's always a big question. We provide lots of insights, good insights, as we like to think. That is what you see on the right side. So we have a bunch of reports. One of them we're gonna talk about today. We have a monthly newsletter. We have a blog. We have a podcast where we speak with interesting people from the sports tech space, and a LinkedIn group where we share sports tech news. And we also have to make some money, obviously, because all that content, at least most of the content, is for free. So what do is we have an online database, sportstechdb.com, which also comes with a subscription model, also with the free version, by the way. And we do lots of market research and consulting, and also matchmaking in the sports industry, mostly shining some light on what sports tech is, what the market looks like, which cool companies are there, and do some matchmaking of startups and investors and brands from the sports industry. And we also help people in that industry to promote themselves through our reports and all the other content that we produce. That is us in a nutshell, but that is probably not why you guys are here anyways. Just a quick shout out to our very loyal sponsor, Signal Sports United. Yeah, you always see them in our reports on the cover with a nice page at the very beginning. We love those guys. In case you don't know what they are a big sports e-commerce company. And I mean, the numbers on the left side speak for themselves. Just a few things that we think are relevant. They operate in 4 verticals: bike, outdoor, team sports, and tennis. They have acquired and consolidated a bunch of e-commerce businesses, which you might know more than the brand, the holding name, so to speak, Signal Sports United. But one big news from them from this year is that they're going to be listed at the New York Stock Exchange sometime soon. I think, according to the press articles that we have seen, a valuation should be around 3.2 billion or something like this. And they do this via a SPAC, like so many other companies in sports tech and other industries these days. So shout out to Signal Sports United. Happy to work with those guys. But why are we here today? We are talking about venture capital in sports tech globally. And this is the report. Ron mentioned it in the comments. You can download it for free. We have introduced a paid version as well. More on that later on. But no worries. The information that you used from the previous reports will still be available for free. Let's jump right in. Or is there anything we have to mention beforehand, Ron?
I'll just take one quick one from Philip. Yeah, we are recording it, and we will put it up online after. Hope your kids are okay and whatever issues you have to deal with get resolved quickly. But yeah, the short answer is yes. We usually don't upload the full, say, whatever, 90 minutes that we record, but you will get the chunks of the main bits. Yeah, so don't worry, you can catch it later as well.
Exactly. I hope we're recording. Sometimes I'm not sure, but so far we didn't mess it up yet. Cool. Yeah, numbers. And boy, those numbers have been amazing. Look at this. We are talking about the funding that went into sports tech companies over the last 5 years. And the most important information, we know that this is a full slide because you want to throw in as much information as possible. The most important number is on the right side. The year 2021 globally has seen $8.3 billion in investment until the end of Q3, so in 3 quarters. And only that number, $8.3 billion, is more than the previous 2 years, 2020 and 2019, the entire years combined. 3 quarters in 2021 is more than the previous 2 years combined. I need to say it again. And if our predictions are correct, so we extrapolate that and add some, reporting lag onto it, we might even reach over $12 billion for this year, which would mean that this year has raised more money, or the companies have raised more money than the previous 3 years combined. So the language that we like to use is that 2021 is the absolute record-breaking and breakout year for the sports tech industry. Amazing numbers. Connected to that, somehow the number of rounds always go down. At the moment, it's 312. If we extrapolate that, and at the lag, we might end up with more investment rounds than last year. But the trend continues that average ticket sizes and median ticket sizes go up significantly. Just to give you the numbers, average ticket size for 2021 is an incredible $31 million US dollar per ticket, and the median one is 3.1 million. Just a quick question, Ron. Why do you think that is? It's industry maturing, or?
I think it's a couple of things. I think the sheer volume of deals, or the sheer volume of the big deals that are getting made, the average is completely skewed. We've seen, Sorare raised 720 million. Fanatics have raised $1 billion in this year. So that it just naturally skews heavier because of some mega deals. But no, I think it's unsustainable that the value will remain at 30. There's one quick thing to add. I wrote an article in June which had the figure at 5 billion. At the midpoint here, we published an article to say, hey, it's been a crazy year. It was 5 billion at the end of June, 8.8 billion at the end of September. So hitting this 12 billion mark as well is, not that unrealistic.
Yeah, absolutely. And just amazing big rounds, like you mentioned. We get to that later on. Just one thing to add. If you look at the top left, we did the breakdown for the regions: North America, Asia Pacific, Europe, and as we call it, rest of the world. And the picture is very clear. North America with over 50%, so the vast majority of sports tech investment over those 5 years, more than Asia Pacific and Europe combined, actually. And we're going to have a look at who actually contributes to that North American funding amount. So that is slide number 1. Second one, it is about the countries who contribute. We had a look at the geographies. Now we go one level deeper to the countries. And first of all, we look to the left side. On the left side, we have the countries over the last 5 years. And what I like to look at first is the change in rank. And we see one big winner, which is Canada. They went up 4 ranks, and unsurprisingly, this is due to Dapper Labs, who had some amazing investment rounds this year. The rest was somewhat stable. Some countries went down or up 1 or 2 ranks, but that is about it. The other interesting thing on the left side is the sheer amount of investment that went into the United States, over 11 billion US dollars since 2017, which means that the US alone contributed with 45% of the investment alone. One country in the entire world, 45%. Now, if we switch to the right side, the US still on top, no surprise there. But this time the amount is even higher, or the share is even higher. The US has more than 50% of the investment in 2021. And typically during a year, or if you look from year to year, the change in ranks is a bit more volatile. If you look at the 5-year time zone or time frame, and here we see the big winner in 2021 is France. Again, a company that it's an NFT. Sorare accounted, as you can see in the last column, for almost 98% of that funding. So France can be happy that they have Sorare, because it pumped them massively in those rankings. And UK, on the flip side, lost the position as the leading European country. Germany lost a lot. Brazil went up. Hong Kong went up a lot. And but often those rankings are influenced by one big deal, as you can see in the last column. And the last 3 countries, Brazil, Hong Kong, and Finland, they are they all have their position because of one company. For Brazil, it was Gympass. For Hong Kong, it was Animoca Brands. And for Finland, it was Ura. Ron, India is strong, keeps being strong. Anything to mention there?
Yeah, super growing market. We've seen this consistently, India appearing in the top 5, top 3 list for, I think, the last 3 years now, and also growing consistently. And again, last year or this year, it's been at number 2. We'll come to what are the driving factors for it, but I'll also mention that India is the country with the most number of sports tech startups. For the number of count of startups, they actually top that list. For funding, it's a little bit lower.
Yeah, cool. And now it's time for our first poll. Sometimes we throw in a question to you guys just to make sure that you stay involved. And on the next slide, we look at cities by funding. We went from global sports tech to geographies to countries. Now we come to cities. And let me send this poll. Boom. So my question to you is, in 2021, which position did New York City have with regards to investment in global sports tech? Feel free to vote now. Ron, you cannot vote, it's not allowed, but I guess you know the answer.
Yeah, of course I do. I mean, New York is the sports tech capital of the world. We've seen it top for all these years, top every chart that we know. This year, was there a bit of a change? We've seen some shifts happening in sports tech. Was it number 1? Was it number 2, 3? We shall see.
Results are coming in, and I think people have read our report actually. So let's come to that page. In 2021, you guys are right. New York City finished at rank number 3. The impossible happened. They were always, since we do this, on rank number 1. And why is that? One reason I already gave you. Paris is so strong this year because of the massive rounds of Sorare, and Jacksonville, for the first time, the number 1 in global sports tech by funding for a year, and actually in the last 5 years also close, thanks to Fanatics. So you might ask, why is Fanatics in? Because we didn't have them in our database before. At least we didn't include their data into our reports. 2 reasons. First of all, they were founded before the year 2000, and we did a cut there. We said, hey, no company that is older than that, and Fanatics was founded in 1999. However, they are shifting towards sports betting, collectibles, also digital collectibles, and we're raising lots of money for these reasons. So we said, hey, actually now it's reason enough to include them into this year's overview. Another observation for 21 is that Vancouver went up 20 positions. Same reason as before, Dapper Labs, and also, I'm not sure, is the score also in Vancouver on?
No, the score was, I think, Montreal or something, but yeah, Canada grew because of those 2. Yeah. I don't think the score is in Vancouver.
Yeah, so I guess these are the 3 main insight from this year. New York went down, Paris and Jacksonville really strong, mostly backed on one big company. Now,
the score is Toronto. I just remembered.
Toronto, okay. Now, if you look at the 5-year rank, a few changes there. New York City stays on the top position, no surprise there. Jacksonville is newly in. San Francisco stays on 3. Bangalore went up 5 ranks, not so bad, because the Chinese cities went down quite much. The year, as we have seen, wasn't as strong as we would have expected it. And other than that, I think you mentioned in the report as well, in the top 10 for the last 5 years, it's good to see 5 different countries actually in there, or not just a US, China, and maybe India dominated list as we have seen them before. Yep.
Yeah, I think one last thing worth mentioning is the number one city in Europe is Paris overtaking London, and from that position, a lot of that is to do with one round of funding and one big company, Sorare, which we'll cover again in detail later. London still remains effectively the capital for the most number of deals and a good chunk of funding, but the big rise of Paris is because of one mega deal in NFTs.
Exactly. And now it's your turn, I believe.
Yeah, so I mean, as always, actually, Gerhard was asking about what we mean when we say sports tech. Gerhard didn't explain it because we just assume that everybody here broadly knows, but essentially, like I mentioned in the reply, it's solutions for anything at the intersection of sports and technology, and we segregate it as per our framework, which again we haven't shown here, but it's essentially how we categorize at Sports Tech X every single solution that falls under for sports and using some technology. And we separate it in three parts: solutions for athletes, which can be any type of athlete, professional, amateur, recreational, whatever; solutions for fans to help them engage better; and the third is solutions for executives, people who work within the sports industry. As you can see here, it's probably not that much of a surprise to see that solutions for fans attracts the most amount of investment, 47% of, and I should point out that this is the distribution over the entire 5-year period. It's also pretty similar in 2021, but 47% of all funding went to fans, 43% to athletes. For executives, always becomes the smallest, about 9.5%, 10% over there. The reason is that B2B solutions, which is what this segment is primarily made up of, they don't attract that much investment because the market isn't as big as, say, the consumer-driven markets of fans and athletes. So this is the distribution amongst the sectors. Now, if you remember our framework, we also dive even deeper. We segregate each of these sectors into 2 or 3 subsectors further. For athletes, we have 3 subsectors. For activity, any solution that helps you during the activity that you're performing, segregated as for activity hardware, which includes wearables and equipment, or for activity software, any app, something that you might be using. And also the third one is before and after activity, which helps you prepare for the, say, sport or fitness activity that you're doing. Interestingly, you'll see for activity hardware, nearly 50%, 47% of funding goes there. So half the chunk goes into the wearable segment. Pretty steep, no? Your apps keep in at about 32%, while before and after activity at 21%. We also highlight the top company within each of these subsectors. So you can see Peloton, the biggest name to come out of the sports tech space in the last 18 months, 2 years for sure. In for activity hardware, Keep, a Chinese fitness app, as the leader in for activity software. And before after is ClassPass, who recently got acquired, of course. Within fans, content platforms, Les Sports is a legacy company, so some old numbers here, still continuing, but content platforms still continue to attract a decent chunk of funding, 39%. Fan experiences, and Ben just spoke about Fanatics, and we'll come to NFTs and everything that's happening in the changing world of fan engagement, but a big chunk of investment here. And fantasy sports and betting, the other big driver. Not as much investment as we have seen acquisition activity, which we'll also tackle in a sec. Amongst the 4 executives, the distribution of that 10% is 60-40, almost 62-38. Organizations and venues, which are solutions for teams, for events, stuff like that. Genius Sports, the company who's been very aggressive in that segment, acquiring companies and also being acquired themselves. And media and sponsors, BAMTech is a media company, quite old now, and they don't exist in that form, but a very important streaming company. This is a lay of the land of how the sectors line up. I also want to show you, now that I've explained that, which were the fastest growing sectors, and especially during the pre-pandemic and post-pandemic period. Now, what we did over here is an interesting bit of analysis. We took the entire period, pre-pandemic, starting from Jan 2017 till August 2020, so in the middle of the pandemic, took that entire period and brought it down to a 12-month average, right? And then compared that 12-month average to the next 12 months, which was September to September. So 13 months again, brought down to 12 months. So we're comparing the same number, averaging it down to a 12-month period. And then you can see in that 12 months, pre-pandemic, what was the investment in fan experiences, and post-pandemic, what was the investment in fan experiences. And here is where you see a huge jump, 420%. And a lot of that is in NFTs, some in other plays, but primarily there. Fantasy sports and betting also saw a huge uptick in activity. A lot of that has to do with legalization of sports betting in the US. Media sponsors for activity hardware, interestingly, you'll see that the jump is not as big, but the base was also pretty big already. 560 million, which is the number one subsector pre-pandemic, if you go by that 12 average total, and becoming number two when you come into post-pandemic. So the growth is still huge. As you can see, all of them are growing. There's only one subsector, content platforms, which shrunk a bit, but that's just because there are new ways of connecting. Sports tech has been growing across the board. That is the most important takeaway from this one.
Yeah, just one thing to add. I mean, I was also surprised when I saw that content platforms is, let's say, the biggest loser there. But a couple of thoughts on this. First of all, it had the biggest yearly average from all of them, so it was coming from a very high point. But still surprised, because we always talked about fitness, content, esports are the three categories that attract the most investment. So I did not expect it to fall down. But then I was like, maybe it's also due to the pandemic, because there was not much sports content. Yes, the industry switched to content away from matches and games, but I was still surprised that it went down. But yeah, I mean, the direction is clear. I mean, 418 or 413% fan experiences, fan in sports and betting, that's massive. And we'll explain where this is coming from in detail a bit later. But I like this little analysis. I think just look at it.
Yeah, just for the scale, I mean, even if you look at, apart from content platforms, the other second smallest growth was still more than double before and after activity, from 400 to 800, nearly 900. So a lot happened in sports tech in 21. And that's why we have more to tell you. Actually, a lot of that is, as Ben mentioned earlier, in a paid version of the report. We experimented that for the first time this year, where we give you things like a monthly breakdown of funding. We've actually highlighted the top 5 companies in each of these subsectors that I just showed you. Also region-wise snapshots. So lots more data available in the pro version of the report if any of you are interested. The same place where you downloaded the free report, I'd already shared the link. The pro version is also available for purchase there.
Yep, exactly. And that was the part about global sports tech. In other words, we stay global, but now we don't look at countries, cities, regions, geographies, or whatever. Now we're looking at companies. Yes, we have mentioned them before already, but now we present them in a more structured way. Yeah. The one graphic that we always start with is this one, the top companies by funding. And what does that mean? On the left side, we look at all-time funding. And what is relevant there? We have a bunch of new companies, 3 to be precise. And the one is Fanatics. No surprise anymore to you guys. We said we included them. They have raised a massive amount of investment since they started, over 3 billion actually. So by far, they are the leading company by now, which I like, because we had quite a stable ranking there over the last couple of years. The second company that is new in the all-time funding is Dream 11. Indian company in fantasy sports, and broadening their offering on position number 6. And Sorare, also new since this year on rank number 7. And also here, similar to, let's say, the top city list, it's actually good to see that we do have countries there besides US and China. Sports tech over the last couple of years was very much dominated by those two countries. And now we have India, we have Paris, and who knows, maybe some other countries in the future. We'll see. If we look at 21, so what happened in the three quarters of 21 that we looked at, there are a few topics that we would like to highlight. The first one, interestingly, for the first month of the year was fitness. I mean, if you followed our webinars before, we have spoken about it a lot because it was the hot topic over quite some time now. And this stayed the same until April. We have seen lots of big fitness-related rounds, for example, in Keep, in Fitur, in Tonal. But then it shifted a bit and it became more fan-focused. And we're going to talk lots about that. Ron's going to do this in a couple of minutes. And this led to the fact that 5 out of the 10 top rounds in 2021 are actually fan-related, including the top 4. Clear signal from the market where things are actually heading. Just 2 things to add, one a bit less relevant, one a bit more. The less relevant one first. Genius Sports, I always like those guys because they are typically the only ones from the executive segment from our framework that Ron talked about. All the other companies are either for athletes or for fans, but Genius Sports, like Ron said, very active recently. They hold up the flag for the executive sector. The other interesting thing, which you don't find on the slide is, and Ron also mentioned that before, we have seen lots of big rounds in this year. To be precise, we had 20 $100 million and more rounds, 20. To put that into perspective, the record so far from last year was 8. Yeah, so we went from $800 million plus rounds to 20. Amazing numbers. Anything to add to this slide, Ron?
Not really. I mean, there's plenty we can talk about, but I think there's some interesting tidbits on the next slide, actually.
Yeah. You're typing and answering the question. Nice. You could have just answered it here.
Yeah, exactly. I mean, Sport Radar is something that you'll see on an upcoming slide, Javier. Also, I mean, the way we consider IPOs and unicorns, we created a bit of segregation in this report.
Yeah, I think we have 2 more slides, if I'm not mistaken, in this chapter. So this is funding amounts this year, last couple of years. What we also like to look at, and this space is also heating up. I mean, if you follow sports tech news, you probably have seen it, is acquisitions. And in previous webinars, we always looked at the top acquisitions over the last 5 years. And this year we said, hey, we have so many just in this year that is more than enough content to put that on one slide. So all the numbers and all the companies and acquisitions you see here, all of them happened in 2021. On the left side is the one where the deal value is disclosed, and on the right side where the deal value is not disclosed. Let's start on the left side. I mean, bunch of big deals. Biggest one, acquisition of the Score by Penn National Gaming, a bunch of other really large rounds as well. But as always, we ask ourselves the question, so from which angle are those acquisitions coming? Which are the themes that are underneath? And one topic that jumps right at us is betting. I mean, betting has been hot for a couple of years. It intensifies even more. So 4 out of those 10 deals are actually related to the betting segment. What else do we have? We've seen a bit of content there. We have seen some fitness-related acquisitions and on the disclosed one, and also we have seen acquisitions in the analytics area. Another interesting thing, especially on the left side, but also partly on the right side, is who is actually acquiring those companies. And if you just look at the flags on the right side of the left side, so who's acquiring those companies, with one exception, Better Collective acquiring the Action Network, it is all US-based companies who acquire companies both in the US, but also all over the world, actually. So we have LiveU in Israel, we have The Score in Canada, we have OddsChecker in the UK, GameFace AI in Australia. So US-based companies look globally for their acquisitions where they see a fit. When switching to the right side of the chart, first of all, we have to mention that there were over 40 undisclosed deals this year, and we picked the 10 that we found interesting. And again, we have a bunch of topics that we've seen there. Betting, same as on the disclosed side, is very prominently represented, and a lot of acquisitions in the fitness sector, with the mega acquisition of ClassPass by MindBody, but also a bunch of other ones. CureFit was active, Whoop was active, HyperIce was active. So fitness industry keeps consolidating and building some massive companies there. But also, and here we finally then come to Sportradar, as asked about before, there were also a bunch of B2B acquisitions with Sportradar, with 11 Sports, and with Genius Sports. So a broad portfolio of different topics, with betting probably being the most dominant one, fitness also very active, and then it's analytics and B2B as like the followers. Anything to add over there?
No, just one question from Ezra. No, these companies are not publicly traded. We're going to address the publicly traded companies in the next one. I just also want to point out that, I mean, we speak about betting driving acquisitions. And we looked at, because there was so much deal making in 2021, that we focused only on 2021 for these two charts, and Ben walked you through them perfectly, which is great. But I also want to mention that over the last 5-year period, the entire period that we consider, 2017 onwards, out of the top 5 deals, 4 of them are betting deals. And these are major acquisitions. I mean, names that you know, Stars acquiring Flutter, or Ladbrokes acquiring somebody, Skybet and Star Group merging, etc. But all of that action was in the betting space. And so right at the top, there's been a lot of consolidation.
Yeah, and it's also because that's why you're going to dive in deeper in a couple of minutes, because there's so much happening.
Exactly.
I'm almost tempted to say it's not as boring as it sounds, because there are interesting things happening, and new angles taken, new players coming in, new content approaches. So it's really interesting what's happening there, even though, let's say, that battle is going on for years now. It just intensifies. This time I can say that word. Nice.
Absolutely.
One last slide, and you guys are good in asking questions that are related to the upcoming slides. Now we come to the unicorn slide, and I believe we have a poll for that one. Is that correct, Ron?
Yeah, we do, which I'm going to launch now. And actually, you can go to that slide already, Ben. But I'm also going to publish a poll that you'll see there's a lot of companies that emerged as unicorns in 2020. Overall in 2021, there were 30 unicorns on this slide. My question is, how many of them are new unicorns that we added in 2021? The options are 9, 10, 11, and 12. I know where my answer is going, Ben, because of course we've seen them.
I think you messed up one of the questions, or does it not show because it's 0%?
No, I mean, it's all showing. I can see everybody's voting in different areas. But yeah, go ahead. Let's let them vote, and you can talk about the unicorns.
Yeah, first of all, I would like to say it's one of my favorite charts, actually, because it visualizes like the value that is accumulated in the sports tech industry by now. And it also shows that it is a global industry. I mean, there are white spots, as you can see, but unicorns are developing everywhere, basically. And yeah, I think Yeah, I mean, what can I say? I mean, you are correct again. It seems like you are good in reading our reports. Well done. Yeah, Ron said it. We have 30 unicorns in sports tech now and 11 new ones out of 2021. So we jumped from 19 to 30. A bunch of additional information there. 14 of them are in the US, so almost half of them. And in general, they are distributed over 9 countries. So a nice distribution over there. A couple things. So why do you see all those colors? You might have seen it already in the upper right. These are all the companies that have a unicorn valuation, but there are still 3 different blocks within them. So some of them, after they have reached that valuation, have IPO'd, so they're publicly listed. Those are the ones that you see in magenta. Some of them have been acquired along the road. Those are the one in blue. And a few of them have done neither. So they're neither publicly listed nor have they been acquired, which might be interesting for some of the investors in the audience. So a few more things that I have observed, and I'm curious if Ron has other observations or additional ones. I found it interesting that if you look to the right, like the Asian market and also in Australia, we don't see any IPO. The only activities that we see, there was one merger between Huya and Douyu, and the acquisition of F45 Training. All the other ones, Stream 11, Mobile Premier League, Ali Sports, Hoopu, Keep, Liz Sports, I mean, Liz Sports being defunct, but those guys have not been acquired. They have not done an IPO. And before I come to the rest of the world, I'll ask our Asia expert, Ron, any clue why that is?
Why they don't go public? I think I can't speak for the Chinese market. For the Indian market, I know Dream 11 is heading in that direction. I think you can expect something, not anytime soon, but I know that is something that they are looking to move towards. Whether it's in a year or two is to be seen. But it doesn't seem like it's a super common activity. In fact, a lot of these companies are listed in the US. For example, Huya and Douyu, which are actually merged on the New York Stock Exchange. I think the main reason is that a lot of these companies, the Asian companies, like to attract new capital from the American markets. So even if wherever they are based, if they want to get listed, like Manchester United did, for example, many years ago, they go to the US to get listed for, basically to attract new investors. That can be one thing. I wanted to point out, I think there was a question earlier about the IPOs. Ben mentioned a lot of these are already here. Sportradar, of course, is on here as well. I should point out, though, in the previous slide where Ben was talking about total funding raised, we didn't include any post-IPO funding. So, for example, Sportradar has raised nearly $500 million as post-IPO, but that is not considered as goes into the total funding for us, because once it's a publicly listed entity, then that the amount of funding that they raise and lose, that it's too volatile and constantly changing. So pre-IPO, I believe we have sources who say that they had a fundraise of about 100 million or so in total. So that's what we consider. So post-IPO, all the fundraise just becomes a separate animal, which basically is the total of all the other companies which are, say, in the neither category, not IPO, not acquired, but all of their funding is what we tally up. Great spread all over the world. Interesting in South America, Asia, Australia, Africa. Maybe there'll be one to emerge from there, hopefully soon.
Few things to add. I mean, we spoke a lot about Asia now. If you look to North America specifically and the color scheme there you see lots of magenta, you see lots of blue. I mean, the American market is quicker. Those guys know how to run their business, so they either get acquired or IPO kind of quickly. And the few companies that have done neither of the two, Dapper, Strava, Swift, Fanatics, Whoop, I mean, we can take some bets how many of them are going to go public. I mean, maybe not this year anymore, but throughout the next year. I wouldn't be surprised if, let's say, 80% of them are going to be listed sometime soon. One question from Gerhard. Ron, maybe you've seen that. How often are private equities responsible for acquisitions?
Yeah, actually, I saw that. I forgot to answer it. Yeah, good question, Gerhard. Not too many, not from what we have seen so far, at least not in the companies that are acquired here. I think there are only a couple of deals by investment firms, but even those are not on this graph. I can think of, for example, All Trails was acquired by Spectrum Equity, but that was a 80 million transaction, nothing close to unicorn level. So we haven't seen too much acquisition activity from PEs in the sports tech space. It's still been a strategic acquirer position primarily. I think the closest one great example, as I mentioned, was Huya and DoYou, which had a joint merger, each of them worth about 5 billion, and they combined to form a $10 billion company, which is a huge entity, of course. So lots of strategic activity happening, not so much purely driven by investment as would be by a PE.
Exactly. You have such a nice way to present those things, Ron. Even I like to listen to yourself.
Appreciate it, Ben. Thanks, Gerhard, to you as well. All right, keeping this moving. And yeah, as always, we have plenty more information. We've broken down acquisitions more. We've broken down the unicorns more. How many were born per year? Yeah, lots more data. And also actually the investor chart, which I quite like to see which investors had been most active in this period. All of that is in the pro version, which you can see. All right, Ben, I think it's time to talk about what has been driving all this investment.
Good chapter. Good chapter.
Yeah, this is a big one. And this is, I think, for us, what we love to really spend most amount of time on is that, hey, these are the numbers, but the why. Like, why is it happening now? What are the biggest trends? And therefore, what is the likely outlook in the coming years? Three reasons. The three topics that you see over here: digital and connected fitness, NFTs in sports, and betting and fantasy sports. These three combined for 81% of the funding in 2021. That 8.3 billion that you saw in the first slide, remember that number, 81% of that came from these three topics. So yeah, these have been the drivers, the definitive change makers, shall we say, of 2021. There are some companies that we've highlighted here, big names that you will recall, but we'll get into details of each of them. Let me just explain in 30 seconds what we mean by each of them. Digital and connected fitness is any app or device which you use for your fitness purposes. It can be a wearable, any cool piece of equipment, your tonals, your mirrors, obviously your Pelotons, or on the app side there's Keep, there's Fitcher, all of these things. Sorry, Fitcher is the mirror, CureFit, etc. So anything that you're using in the fitness space, app or hardware, is in digital and connected fitness. NFTs, Ben, you want to do a quick one here?
I mean, don't get me started, otherwise I talk about it.
Yeah, maybe then I'll just take it to myself. Non-fungible tokens, because he just loves talking about it, so I have to give him a little. Non-fungible tokens, basically these are, think of them as digital collectibles. Sorry, I'm still a little bit under the weather. Digital collectibles. Fungible is the operative word, that these are unique. That's what it means. So these are it's fungible is replaceable, so non-fungible makes them unique, and these are tokens, so they're digital. Yeah, so in today's world so far, we've seen primarily as player cards or images and videos. NBA Top Shot, of course, made that famous, but what else? Where is this place headed? That's what we're going to cover. And betting in fantasy sports, the description explains it all. But why has this been such a big trend? Also, we'll come to in a second. Let's start with digital and connected fitness, which has been the biggest one, but probably no surprise here. Everybody pre-pandemic, post-pandemic has used some sort of fitness app. Whether you've invested in a device into your house or you've just found an app that you really like, that has been the thing during the pandemic. 40% of all that funding, $3.4 billion, came into this category. So the biggest contributing chunk of 2021 came from digital and connected fitness. And by the way, there's a lot of companies, 105 companies, startups raised funding in 2021. So there's plenty of money and it's being spread around a lot as well. So let me just set the context of what is exactly happening in this trend. Of course, during the pandemic, we saw a huge uptick in every sort of parameter in the fitness industry, for app downloads, for purchases, for even apparel. Fitness apparel grew. People were sitting at home but buying a lot of stuff. It was only the brick and mortar stores, the gyms, of course, which was suffering a lot. So fitness was growing hugely during the pandemic. But in 2021 specifically, we have seen further growth and further investment. You remember that the chart that we showed of growth pre and post pandemic? Yeah, even the fitness space more than doubled. It was 240%, right? So even in this space, which was already super large, it continued to grow, and it contributed to the largest share of funding in 21. But the other big thing is that this little space on your hand, left or right, whichever one you wear it on, your wrist has become the, let's say, battle of the wristbands. I remember we called it in a previous article. That is what everybody's competing for. Apple, of course, has been the incumbent. I think even till today, they have 52% of the smartwatch market share. Is that what Apple owns? But Google with Fitbit, which is what I have, anti-Apple user here. Amazon, of course, with their Halo device. Facebook coming in with their VR, which is, I mean, they've already rebranded, is no secret now. They're also coming up with their wearables in the fitness space. So the VR is not for your wrist, but for something else. But everybody else is battling for your wrist space. So there's fierce competition between these tech giants. That is on the wearable side. Apart from that, Apple also launched Apple Plus, their Fitness Plus, their fitness platform. Amazon launched Halo, which is their device, plus classes. Facebook, of course, is going VR. And there's tons and tons of activity from the big tech giants who are all taking this space very seriously, also contributing to the big funding. And the third one is the emerging giant, which is Peloton. Now, Peloton can pretty much compete with these guys in the fitness space, at least. They have not only gone into absolutely smashing the bicycle market, but they also got into music, which is a big part of their business now. They had a collaboration with Beyonce in 2021. They launched an apparel line with Adidas. They also acquired companies where they will be launching their own wristband. So plenty of activity coming in from Peloton. But not all news was rosy for them. They actually had a lot of issues with order fulfillment, but I guess that's a good problem because there was so much demand that they couldn't keep up with it. But more importantly, they've been facing shrinking margins because they've not been able to maintain the high margins that they were maintaining pre-pandemic. A lot of that is because they've had to discount sales of bikes as order growth is declining. They're still growing, but it's not growing as fast as it was. And why is that? Because as we can see, the gyms are not dead. Far from it. In the last 3 months, there has been plenty of evidence and data to suggest that people are happy to return to gyms, to have that community feeling of going and meeting people in person. And in fact, MindBody's acquisition of ClassPass is a nice example of what will this look like. So the idea of basically some sort of hybrid offering where you can do something at home and you can like use your phone or your laptop and do your workout, but also maybe once or twice a week, go to a physical space, go learn from an instructor directly. That seems to be the future. It's not, the gym chains are not dead at all. That is clear. So Peloton, while they continue to grow and not as aggressively as before. Also, they had issues with recalls and things like that. Yeah, Ben, we don't have a Peloton bike yet, but is this the time you think you'd buy one?
I would still like to test one, but more than the bike, I would like to test the treadmill.
Yeah.
But couple questions before I jump in. Who's this company after Amazon?
Meta, you mean?
Meta. Oh, yeah. Sorry.
Yeah.
It's a little typo on the slide. Might come to the metaverse, which connected to NFTs. But yeah, I mean, you've seen the discussion about the metaverse. Facebook is obviously heavily relying on that strategic shift. I mean, they even changed their ticker symbol to, was it MVRS, so metaverse, which is a smart move because now Facebook will always be connected with that term, which is not in mass media yet or about to be there. And all those companies, Apple, Google, Amazon, Facebook, I think personally, not sure if you share the opinion, but I think they are way less hardware dependent than like all the other companies that you mentioned, the Pelotons and the likes. So they have very different starting points. The ones really have to make sure that they have really great hardware that they're gonna be shipped and sold and they capture share of the market. And all the others, Apple, Google, Amazon, Facebook, they use either existing devices or use the ones that you have mentioned, like the wristbands and the others, or like Meta, soon to be Meta, the company formerly known as Facebook, whatever that abbreviation is. They say, hey, all you need is your Oculus, and then you are in the virtual worlds. This is where you exercise. So interesting development there, and I'm curious to see how that has gone around. Connected question to that: do you think any of the big ones will acquire some of the hardware leaders, or does it make no sense?
No, which is actually why I disagree a bit with your comment. I think they're not as hardware dependent, but they're all looking for hardware as to be the entry point, the gateway to the consumer that they want to acquire. Because the moment somebody has, the wearable devices. Yeah. I think that's why they're focusing on it, because they see that is like, I mean, the commitment to switch from hardware is harder than when it's just an app. If it's Apple Fitness, you might use any fitness device, but the moment you have a watch and you get into that universe, then I think that you're more likely to stay. Point being that I believe makes them more likely to acquire some of the companies, the two standout names that we've been talking about for a while that we expect a deal for. One is a Ring. Can you put a ring on it, please, somebody? Is Oura. And maybe Peloton will be the one. They already have Beyonce, so they can sing a nice song about it. And the other one is
with Monica and Brandy again. We had it in one of our live shows. Big 90s hip hop R&B fan over there.
Exactly, that's one. And the other one is Whoop. I mean, somebody's going to do something. Maybe it's Microsoft who'll suddenly wake up and buy a company like Whoop. Who knows? But I mean, it's also, by the way, interesting to overtook, right? Amazon recently is the most valuable company and all of that. So, I mean, I think it's a space waiting for more action. And there are a couple of big emerging companies who are waiting to be acquired. And I think those are the two big names that I expect will drop soon. Yeah. Speaking of names, here are some companies that we believe are worth watching out for. Some interesting names. Bold is one. I mean, it's not a super high-tech company, but I just like the fact that they focus on fitness for everybody who's 50 and above, which, Ben, not that far for you, no? But anyway, sorry, cheap shot. But Bold, I'll get you a subscription of that.
Thank you, Pascal. That's so wrong.
Sorry. FitXR, sticking to the VR-based fitness play. Super interesting device. Again, all Oculus based, and I think Oculus is going to become the platform, almost the marketplace for you to test a lot of this fitness. I mean, we've been talking about this for a while to get our own set of Oculus devices. And PlayPulse is a third one, Oslo-based company, guys we know really well, which is a smart workout bike, but a bit different from Peloton. It's more gaming oriented. And yeah, you sit and you play games while you're cycling, including watching Netflix, which is, I think, my favorite feature from what I've seen is that you have to pedal to watch Netflix. Basically, to keep streaming, you have to keep working out.
But it's not just streaming; it's also games. You know, it's
Yeah,
like
exactly. So to keep doing whatever you enjoy doing, you have to keep.
little side story there. One of the very first sports tech events I've been to, I think it was 2018, maybe even 2017, was Smash Helsinki, and I've tested PlayPulse there. It was like, I mean, it's not the current version anymore, and I'm not sure. Maybe Mr. Zorita can jump in there. Maybe this is where he and I met for the first time. I'm not exactly sure because he always hangs out at that event as well.
Yeah, perhaps. Yeah, there you
And
go.
he's still listening. Good. Yeah, could be. And remember PlayPulse. One of the companies I would love to test, actually.
Yeah, FitXR is one for me, but again, there's so much to do. All right, so that is the first spiel on digital and connected fitness. Next up is, of course, Ben's favorite topic, which is NFTs in sports. Now, I'll walk through the numbers before I get Ben in for some of the qualitative stuff. Now, as you can see, first straight away, 25% of funding. So it was 40% in fitness, 25% in NFTs in 2021. But for some context, in the previous years, I think fitness was still contributing anywhere between 30 to 40%. So it was a big contributor to growth in sports tech investment for a number of years. NFTs went from pretty much zero last year to 25% in 2021. So the fastest growing space, no doubt. Again, I'll take you back to the slide with the bubble chart, I call it, where we had the fast growing spaces. The fastest growing was fan experiences, which is where NFTs sits. Now, NFTs didn't actually emerge out of nowhere. I mean, Sorare has been around since 2019, NBA Top Shot in July 2020. They were all kind of doing their thing, bouncing around the yet to be formalized, say, sports metaverse terms, but they absolutely exploded in 2021. I think each of them, Dapper Labs, which is NBA Top Shot, and Sorare had huge monster months in February and March of 21. I think Dapper Labs crossed over $200 million in gross sales over that period. And Sorare also had their biggest month till then. I think it's been broken last month, if I'm not mistaken. But until then, it was $15 million in March of 21. So they absolutely broke out at the start of 21. What else has happened? So that's a bit of the background. The year absolutely started as in a smash form for NFTs. What's happened since then? Well, a lot more and more funding. We talked about this earlier. Paris is on the list of the second most funded city in the world in 2021 on the back of Sorare, who raised $728 million this year. Dapper Labs, not far behind. They did a round of $250 million, I think, last month, taking that total raise to $550 this year so far. That's also been a reason for Canada's rise. Candy Digital raised $100 million. Animoca Labs has raised a big ton of money. Fanatics, who Ben talked about earlier, out of the nearly billion that they raised, $350 million has been set aside for their trading cards arm. Now, officially, that's not yet NFTs, but it's still very much in the digital collectible space. So I can't imagine that it'll take too long for them to start jumping into NFTs, as we have seen in the recent news from Socios, who finally jumped into the NFT bandwagon after being a fan token company for so long. So no matter which way you look at it, anybody who's doing anything in the digital collectible market is going to bring it down to NFTs. So lots of guys raising a lot of money. Why? Well, it seems it's pretty clear. It's all for the battle for acquiring the rights holders. Now, Dapper Labs set the benchmark with the NBA. They've since acquired La Liga in Europe, of course, the NFL famously. Sorare has been working with a number of leagues in Europe, and they also, but they most recently and probably most publicly announced a partnership with Bundesliga, which has a couple of different things. That, if I'm not mistaken, they have a video, similar to NBA Top Shot, video highlights thing. Sorry.
So the big clash is happening at some point, and Sorare is producing highlight clips with Bundesliga for the first time, moving to Dapper Labs territory. Dapper Labs has signed La Liga for highlight clips, so it's happening.
Yeah, exactly. This whole thing, I think right now the formats that you've seen so far are the static images and the video highlights. And it seems like these two guys are fighting with each other for that. And you have a couple of other players, Tops, who kind of lost out their MLB contract long term. They also lost out their IPO pretty much after that news broke, which Fanatics took over that contract. So double whammy for them. But they did announce UEFA to stick on board. So I don't know, make of that what you will, but what does that say about UEFA? Yeah, but okay. But yeah, the Tops has UEFA. They're going to work with them. And so there are a bunch of partnerships that are working. Animoca Brands, for example, works with a lot of motorsports, with MotoGP and so on. So lots of different companies are going for the rights holders to acquire their rights to sell their NFTs. This is the big, say, catchment, the acquisition strategy. But apart from what's happening at a consolidated league level, at the individual offerings, I mean, here there is tons and tons and tons of work, of news happening. I mean, this is like NFT a day kind of situation, from Roberto Carlos to Golden State Warriors to US Open to any tournament, any sports athlete, any influencer, who everybody's launching their own NFTs. There's a lot of noise, which is the problem. So to see the good or the bad is the biggest challenge. But if you don't know it already, Nifty Sports is a channel that we have where you can filter through all of that. I'll explain that, or Ben will explain that rather, in a second. But point being that there's been a lot happening in this space. But new formats, and this is, I think, where stuff gets most interesting. Ben, maybe I'll let you take this one, which is, what is the coolest stuff that we're getting to see in the NFT space?
Well, how much time do you have?
And you have about 3 minutes, Ben. I'll give you 3.
Let me start this way. If I, for some reason, for some people, look that I'm almost 50 years old, that is because I'm knee deep into the NFT topic since a couple months. I've been down the rabbit hole. Ask me anything. That's one thing to start with. And Ron is absolutely right. Everybody is at the moment focusing on player cards, highlight clips. This is where the big numbers are presented, making headlines. Ron spoke about it. But I believe that there's so much more to this, and it's one of the most significant changes that we are witnessing even in the history of the internet. Yes, that's what I said. In the history of the internet, and people will be surprised how significant those changes will be. And you have touched a few things already, and time is probably not enough to speak about all of the thoughts that I have in my head. But yeah, everybody, my prediction just quickly is all of the rights holders will have player cards and highlight clips. They go with the top 3-4 players, work with 1 or 2 of them. There was one question from Ibrahim about exclusivity. So yeah, maybe there will be exclusivity for player cards and one for highlight clips. But the really interesting stuff is happening besides that, in my opinion, and there's lots of topics to talk about there. And I think this is where we bring in the 3 companies, right, and then take it from there, correct?
But you just talk about the POAPs, the Play to Earn, and the Metaverse. Yeah.
Okay, sorry, those. Just a few things that we've been witnessing, and we're following NFTs in sports and beyond sports for a couple months now. POAPs, for example, proof of attendance protocols, which is a very simple form of giving someone that went to an event, let's say a football match, an NFT, like a little reward. It might sound very simple, but we live in a digital world and we like to show off things in the digital world as well. And interestingly, or when you think about it, if I have a ticket And funny enough, I bought lots of used tickets last year. Ron will laugh about this one. And I cannot show anybody my physical tickets that I have laying around here. But if I have virtual tickets or digital tickets or those pro apps that prove that I have gone to a game, and that pops up in, I don't know, my Twitter profile, my Instagram, or whatever profile I'm using, that is my digital flex there. I can show to the big audience that I may or may not have that I've been to games. Easy mechanic to add NFTs to games. Play to earn, we have seen massive revenue with Axie Infinity. It's not sports, but basically you reward your fans or customers, whatever you want to call them, for certain activities on your platforms, mostly games. And then they can collect rewards in form of NFTs. They can also make money with them by trading them. So there's a very interesting feedback and reward loop that starts to happen there. And last but not least, Ron said it, the sports metaverse, virtual worlds in sports. And we have seen the Facebook Meta news. We have seen Green Park Sports. You talked about them building virtual worlds for sports fans where they can also, for example, have virtual merchandise. So a bunch of stuff happening there. But I think we need to make a dedicated webinar or even a report on sports and NFTs. Just a few things here.
Yeah, exactly. And I think that's something that we will come up with probably for early next year, maybe. No spoilers there, because we, as Ben says, that, I mean, he of course follows it so closely, and I, as always, from a distance, just take the big picture in, and there's so much happening. A very interesting space to watch. But here are some companies to watch. Quickly, Collect ID, which is a Swiss company, which actually connects real-world products, so bags, shoes, merchandise, and creates digital jerseys, exactly. Connects them to the NFT world. Dibs is a platform which creates fractionalized saleable assets of existing sports cards. So any physical sports memorabilia, I don't know, a Babe Ruth Panini card that you might have, which you can't afford because it costs hundreds of thousands of dollars, but you can buy a $10 portion of it. Essentially, that's the use case. Very interesting company based out of LA. And the football company, which is into building the football metaverse. It has this fantasy sports element. They have virtual merchandise. If you have NFTs, then you have to dress them up. And they have other cool ways for fans to engage. Those are some cool companies to watch out for in the NFTs in sports space.
Before you move on, wait a second. Let's go back one slide, because we had a couple of questions, and just two things or a few things on NFTs in general. Why I like them so much, and it's some of that I have from articles that have been very popular in the last couple of weeks. First of all, NFTs are an entirely new asset class. Full stop. I'll say it again. NFTs are an entirely new and digital asset class that you have to bear in mind. And I don't know, at some point the stock market was invented, other asset classes were invented. This is a completely new one, which has proven that it can generate massive revenues with only a very, very, very small portion of people only in that field. Just two numbers, and there's always a risk that I'm going to speak about it too much. OpenSea, they call it the eBay for NFTs, just to stay on that level, had a $3 billion revenue month in August with, I don't know, 200,000 or 300,000 users. And Coinbase is now going into NFTs, and they have 2 million people on the wait list. That is something interesting. The other interesting thing is that one article called NFTs the ownership layer of the internet. So basically you can take digital items and put them on a blockchain, and then they belong to someone. The history can be followed and all of that. And I think this is gonna be massive. Coming back to the questions that I wanted to ask, let me think, see which ones there were. Yeah, of course, the Socios fan token or token question came up. First of all, fan token, what Socios did so far, are fungible tokens because it doesn't matter which one you have. So here we only talking about non-fungible tokens. They are moving into NFTs. They just did a drop with AC Milan. And of course, they're using their big partnership portfolio in the way to make even more money. There was one question, I don't know exactly who asked it, but yeah, it was Pascual. Yeah, how much of a bubble is Socios, and do they add real value? I mean, this is a heavily discussed topic, and to be very brief, I'm more on the skeptical side for a bunch of reasons. I do believe that the people who hold those coins are not necessarily fans, and this, I would rather say, it's an investor coin for people who try to make money with them. The question also is, why would you need a cryptocurrency connected to this, which with the value that is fluctuating? You could solve that in different ways. Also, from a legal perspective, they are in a interesting, let's say, gray area. So I'm really curious what they're going to make out of it. It can be something interesting at some point if they use their user base and their rights in a good way, for example, with NFTs. But at the moment, I'm rather skeptical, also because it's still very complicated for many people to use them. But my main point is, I don't think that is really appreciated by fans as of now. That is my short take. And the other question was from, I don't know, somebody asked about tokens for fitness. Daniel, use of tokens for fitness, getting tokens for training. Yeah, again, if it's just tokens, that is fungible tokens. Where I see more or better use case for non-fungible tokens in fitness is to potentially store your health and performance data on NFTs in an anonymous way. Also, big topic. First companies are active in that field. But yeah, probably too much for this webinar also because we're running out of time shortly. Any other questions that I missed now?
No, I think we're good.
Cool. Yeah, and now move on.
Yeah, as always, lots that we can talk about, but keeping it moving. If you want to know more about the NFTs in sports market, sign up for our newsletter, niftysports.co. You'll get a weekly update of what is happening in this space. Right. Keeping this going, our last topic or last big trend in 2021, which contributed 16%, taking that total up to 81, which I mentioned at the top, is betting and fantasy sports. This other huge segment, which I believe is the most closely linked to NFTs, or more closely linked than you'd like to believe. And the application of it will come to later. But anyway, betting and fantasy sports is an old industry, has been around for so long. But why is it relevant now? Well, simple fact is legalization. 28 US states have now legalized sports betting over the last 2.5 or so years. 2019 is when New Jersey and I believe it was, apart from Nevada, I think it was Delaware, was it? Which were the first states. Yeah, Delaware and New Jersey were the first states after Nevada. And since then, there have been 26 more. There are 4 more which will be legalized likely before the end of the year. And it can't be long before the rest of the states catch up in the US. Why this is important is because it changes the way sports monetizes fans in a big way, or it increases the avenues, let's say, in that there are many more ways that fans can participate monetarily with their sports teams. So what has been the action that has happened in 2021? Well, for starters, there has been a flurry of sports books. Everybody wants to be the betting house where these bets are placed. And when I say everyone, I mean everyone. You've had companies like the big broadcasters, like Fox, like NBC. Disney was the latest one to announce that they are likely to get into their own sports book with ESPN, who of course they own. So the big broadcasters have jumped right in head first. DraftKings and FanDuel, I mean, they've been sitting on this news for years now, probably planning for this from the 2016 when they were battling at it for daily fantasy sports market share. they've got launched their sports books. FanDuel, of course, is part of the Flutter Group, and they were acquired. You've had other companies, media companies like Barstool Sports, who raised 160 million in the start of 2020. A big chunk of that has gone to the Barstool Sports book. Dave Portnoy, a guy that I don't particularly like, but they know what they're doing, at least when it comes to sports betting. So there's been a lot of sports books that have launched. So you, if you're a sports bettor, have plenty of choice. And what else has happened? Yeah, a lot of consolidation. We mentioned this in the acquisition slide. Over the last 5 years, 4 of the top 5 deals in acquisitions in sports have been in the betting space. Apart from that, within 2021, we've seen all of these guys active, acquiring a whole bunch of companies, whether you're DraftKings, whether you're Endeavor, who acquired SimpleBet, OpenBet made an acquisition. There are lots of these companies being acquired either for their rights or their algorithms of how they generate odds, or for their users who they already have that can place bets for these sports books. So there's been a lot of activity in this market. But most interestingly, there has been a lot of innovation, which I guess is the biggest surprise. So let me just charge my laptop as well. The most amount of innovation has been in the formats in how betting is reaching audiences. Broadcasters are creating dedicated sports feeds, dedicated broadcasts for betting with commentary, with graphics, with really, if you're a sports bettor, that's a dream for you to be watching. There's so much more innovative content on social media. There were TikTok channels launched, which are purely sports betting focused, where you can get super real-time information. You get all sorts of dynamic types of bets that you can place. There is more content, audio, video, etc. There's been a plethora, like a real boom in the type of content that sports betting is generating. Why? Because of the sheer volume of money involved. Where there is money, there will always be innovation to help make more money. Simple as that. This is how the world has evolved from day one. Now, what the impact of this is? Well, you've already seen it percolate through the rest of the world. In Europe, we've seen a rise of sports betting sponsorships. Interestingly, you've seen a lot of the teams, PSG, Inter Milan, a lot of them signing up partners in Asian markets. So they're trying, even if it's, let's say, betting is a bit frowned upon, illegal in some parts of Europe, or just the dirty cousin that nobody wants to talk about. Well, the teams are still interested in talking to this cousin, but over the phone in a different country. So they're interested in bringing partners in to tap betting in other markets. So they're still keeping that channel of communication open. India was the big market. India and Brazil were the 2 big markets that were likely to legalize sports betting following the US. Now, there have been changes in both of those. Bolsonaro in Brazil and the government has taken a step back. There's been friction. India has gone one step further. In the state where we talked about Bangalore, where we're from, where part of the SportsTech X team sits, there was a court case launched against Dream 11, which talked about game of chance versus game of skill. And so there was a public interest lawsuit filed. So it's already in a small court, in a local high court. But there is some legal problems, shall we say, in the fantasy sports / betting market already. So it's yet to see how much legalization will happen in the rest of the world, or it's just the US which will do it for now. But I think the biggest thing is that if this proves to be a success in the US, and let's say, what do you define success? Because how many people will be affected is a separate question, but how much money will be made is a separate one. There will be a lot of money made. I think more and more countries, once they recognize that, then you're going to see more legalization of sports betting all over the world. Quickly on some companies to highlight, Sleeper is super new in their formats of fantasy, very interesting company. Wager, which is, again, using interesting AI to create odds and recommendations. And Zed, Ben, you want to talk about a company that combines 2 of your favorite topics, NFTs and horses, with sports betting.
Nice one, yeah. Yeah, I mean, if you haven't seen them yet, you can purchase horse NFTs, and those horses you can, like in good old days, the 50-year-old amongst you might not remember, like a Tamagotchi, you can, like, I don't know, take care of your horse and then send it to races and actually earn money with them. Yeah, big thing this year. Interesting partnerships with NASCAR and then I don't know, I think also in golf or so. Interesting.
I just love that company. I mean, it's virtual horse racing. You can breed horses virtually. Like it's just very cool idea. I just really like that one.
Yeah.
My favorite NFT use case. All right.
Just one thing to add. Sorry, I always interrupt you when you want to go to the next page.
No, I'm just conscious of time. We want to wrap this up in 5 minutes.
Yeah, we'll be fine. Not really, but we pretend. No, just one thing that I from a European perspective, find interesting is, I mean, sports betting has been around for so many years here, and now it's legalized in the US. I'm like, okay, wow, they're so fast and innovating and doing lots of things like boom, boom, boom here, and they're integrating into the feed and all that. So I'm amazed by how quickly that's evolving. That's all I wanted to say.
Yeah, I mean, when those guys, they don't mess around. Yeah, when they want something, they do it right and they do it quick. We had a question from Vimal, I believe, earlier in the chat asking about sports tech funds. Well, here's a slide, Vimal. This is the one that you've been waiting for. If you haven't seen it in the report, then take note. I wanted to do a poll over here talking about how many funds there are all over the world, but I think it's pretty clear to see. It's the US that dominates this landscape. I think there are, 22 funds and another 5 networks of players. So it's nearly 30, let's say, formal investment entities based in US and Canada. In Asia Pacific, it's just 4 or 5, much lower number. And Europe, we're seeing a bit of a rise, and there have been some new funds announced in 21, which is great to see, and long may that continue. But it's still nothing to compare against the US. If you remember chart number 1, where Ben showed you the first 5-year chart, I think it was 55-60% of investment globally happens in North America because all the money is there as well. It's simple as that. They have all the investors who are most active. Again, when these guys want to do something, they really commit to it. But yeah, lots of important names that you should mention that are worth highlighting. In the US, companies like Courtside, like Mindspring Capital, 76, Next Ventures, great investor funds that are worth following, if nothing else, for what type of investments they are making.
One thing to add there, the investors that you see here, they are focusing on sports or have at least a dedicated arm for sports. It doesn't mean that other players or other investors don't invest in sports. To the contrary, some of the biggest names in global investment are active in sports tech investments as well. If it's, I don't know, SoftBank, Tencent, Andreessen Horowitz, all the big guns, they invest in sports tech companies as well. But we highlight the ones that have a dedicated sports focus.
Yeah, good point. I mean, there are tons of funds which are active, but these are the dedicated sports tech funds. More content behind our paid report. Last plug for this one. I promise you that won't do this again. But we'll basically divide it up. All of these sector snapshots will show you what's happening in the 5-year chart, the B2B versus B2C, sector-wise breakdown, top countries, top companies, and most interestingly, top investors. What we also do this for is each of our subsectors. So for activity hardware, software, the content platforms, fan experiences, you can see the highlighted companies, each of them, what has been the trend in each of them. So it gives you another layer of data and insight into what has been happening in sports tech all this time. Ben, let's wrap it up.
Yep, just one slide with a quick overview, just some numbers that we might or might not have mentioned throughout the course of the webinar. Bear in mind, or maybe you want to remember, that 8.3 billion US dollar went into sports tech this year. Might even be above 12 million till the end of the year, because this is only the first 3 quarters. With regards to global funding, just 2 numbers that we find the most interesting. 3.8 billion of those 8.3 are from the US, so almost 50%. And the dominating sector is fans and content driven by NFTs, betting, fantasy sports, as we walked you through it. The top companies, Fanatics, now in our database because of the shift in strategy. They still do e-commerce, but a bunch of other stuff now. Especially Ron talked about it, very active in betting, going into NFTs. By the way, Candy Digital is owned by Fanatics, so they're going into interesting directions. We have spoken about the unicorns. We have 13 now in sports tech, and 11 new ones came out of 2021. By the way, we didn't even speak about it, but most of them are B2C businesses. Hardly any B2B unicorns. Should have added that. And the two top trends of 2021, according to investment at least, fitness, digital connected fitness, and my favorite topic, the non-fungible of the tokens out there, with also 2.1 billion of the 8.3. So almost, it's a bit more than a quarter. That is the summary. Just a few key insights there. And if I wouldn't have encouraged everyone at the beginning to keep mentioning where they're from, we would have been in time, but we're only 1 minute over time. Amazing.
Not so bad. And we also got through the questions. I think that's the most important. Rather than have questions for the end, we like to keep the session most interactive. So to take your questions as and when they keep coming up. But anybody has any last couple of questions or words to throw at us? Please feel free to shout out. And besides that, we're going to upload it on YouTube, as we said multiple times. Not sure when that's going to happen. Give us a few days. We're super busy with a bunch of stuff, but it'll be there at some point next week, I would say. Sweet. Everybody's thanking us. It's always good, of course, always appreciated. So I would assume no more questions over there. Guys, I think it's time for some more hot water to give the throat a bit of a break, and us old men will sign off. Great guys, keep in touch, and we'll see you in different parts of the world soon.
Absolutely. Connect on LinkedIn if you want. The typical shout out at the end. And that's it from our side. Thanks everyone. Have a good day, evening, wherever you are, and speak soon.
Ciao.
Ciao.